In this video, we will talk about why most investors lose money and how you can win. Because if you are an investor for the long term, you want a strong portfolio with strong companies and hold on to your winners. But most people are not confident enough to hold on to their winners, and they trim the position, they sell too early, and they cry a bit after this, later, in a few years. If you had sold your Amazon shares in 2015-16, you regret it, basically. Amazon is typically a company that you buy and hold, and you sit on your hands. If you are new to this YouTube channel, welcome. This is a channel for stock pickers. My name is Christophe Nour. I've been investing in the stock market for almost a decade with a performance of 25% per year. And I like to buy and hold stuff. So today, I want to share with you an example. The example is FICO, Fair Isaac. This is a company that does scores, FICO scores in the US. Pretty important. They are the clear leader, clear monopoly in the US, and they have different business segments. You have the software side, the score side, and in 2018, the business became a little bit better. Basically, they sell the scores so that people know your level of are you a good lender or not, a good person or not, so that you will have an easy loan from the bank. You have a score that goes in the US from, 300, 400 to 900. And if you have a very high FICO score, you are much more likely to get a loan from the bank. Basically, this is how scores are used. And it's in monopoly. We are talking about a company with a market cap of 50 billion right now, $50 billion. This is not the first time they try to kill FICO. They tried a few years ago with the Vantage score in 2014, where you have three bureaus that made an alliance to kill FICO. They didn't kill FICO. Didn't manage to do it. Now in 2020, 2021, you had a new company called Upstart that wanted to kill FICO because of the use of AI, Upstart stock. And they said, yeah, this is the new way, the new FICO. And it was crazy. PE ratio at 200 at the bubble. And then it turned out that it's impossible to kill FICO. And now the stock is, since IPO it's plus 80%, but since the peak it's getting destroyed. And now they lose money. It's impossible to kill FICO. That's the point of this video. Some businesses are impossible to kill. And if you have this kind of business, the best thing to do is to buy and hold. Because these businesses will stay here forever. They are in a monopoly and they can't be touched. They are so important to the banking industry, for example, this business. They are so important to the US economy, and they compound. And they grow revenue, they grow earnings, they do buybacks. So earnings per share is growing double digits and the stock is going up. Right now, you may see the stock price. You may say that it is a clear bubble. Right now, the PE ratio is 110, but it was not always been the case. It's only a recent phenomenon. For full disclosure, I bought the stock here at 375 in November 2021. Here, I can tell you from experience that when I bought in 2021, nobody liked the idea. Everybody thought that Upstart with their new model was going to come and disrupt them. Nobody wanted to touch FICO because the stock had been going nowhere for 3 or 4 years. And now seems like people like it, so the stock is up 6x, 5x, 6x. So valuation, I see this as a no issue. It will go up and down. And actually, FICO has such a strong pricing power, such a strong moat that they can increase 100% their mortgage scores. So they can basically double their price and people will keep buying. You have in such a high competitive advantage, high competitive position for the stock. If you want to do more due diligence on FICO, you can do. You have plenty of information on the internet. Now the stock is expensive, but my point with this video is, if you have a stock like this, if you look at the max for the past 20 years and the stock is going up and up and up, you will have the temptation to sell when the valuation is getting a little bit expensive, like a PE ratio of 40, 50. My advice for you is to not sell. my recommendation is to let the winners win. Let the flowers grow and cut the weeds out. So there are some people that do the reverse of this. It's completely understandable. Once a stock does a double, you cut a little bit. And once a stock is dropping like a rock, you double down. That's not the way I see investing. I prefer to let the flowers grow, let the winners run, because most of the time, winners keep winning. Most of the time, these companies are winners because they have a clear moat, a clear vision. They are better than competition. And if they are better now, there is a high chance that they will be better in 3 years. And that is my job, to differentiate between the weak moat and the strong moat. So if you only invest in strong moat companies, you will have these opportunities of buying and just holding for dear life, and you wait and when you wait and wait. And most that can be fearful. I understand this. It's already a triple. PE ratio is 50. Maybe you will have a reversion to the mean. But if the business is so good, it will not matter. And there is an investor that has completely understood this. If you want to check, you have Dev Cantesaria from Valley Forge Capital Management. I'm on Dataroma right now. This is a website where you can see the portfolios from the super investors. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. You have this portfolio. His first position is Fair Isaac, mostly because of the price going up basically. But you have other companies, 1, 2, 3, 4, 5, 6, 7, 8. 8 companies that are very high quality with a clear moat, a strong competitive advantage. And these businesses are unbreakable. These businesses have a very high chance of growing and growing and growing and delivering more free cash flow and more free cash flow, more free cash flow. And Valley Forge Capital Management, they are very good at identifying these compounders before they explode. So Dev has bought FICO a few years ago before they exploded. In 2018, the business improved drastically because before that they had the pricing power, but the score prices were capped, and the cap was cancelled in 2018. In other words, the pricing power of the business model increased significantly in 2018. And you know what they did? They increased the price of their scores plus 15%, and then plus 20%, and then plus 20%. And they can do more because they are so dominant. They can boost the price a lot. And if you believe in this industry, in this monopolistic position, you can still buy the stock. I personally would not buy the stock right now. You have a high position, but as I told you previously, there are periods where nobody wants to touch the stock. There are periods when I bought, that's only 3 years ago. When I bought in 2021, nobody was not interested in my FICO. I didn't see any YouTube videos on FICO. Okay, this is a stock that has done nothing for the past 3 years. You have some competition with AI. This is just a software company. Nobody was thrilled. So okay, you want to buy when nobody's watching. So this is another stock that has been very nice to me. And basically, let me check my notes. You have this. Some businesses can be killed. And basically Visa, MasterCard, FICO. These are unbreakable business model. You can say the same about MasterCard. MasterCard has a valuation at 40 times earnings right now. Same thing with Visa. You can't kill these businesses. We are talking about businesses with 50% net margins, 50% profit margins. Incredible. A lot of free cash flow. They do some buybacks. That's some amazing business models. Duopoly, MasterCard, Visa. You can't kill them. You can't break them. And they are a hedge against conflicts. It's a hedge against inflation. It's a hedge against recessions. People will still need to pay with their card transaction fees. You know how they work. And the last thing before I let you go is that this stuff of just buying and holding and sitting on your hands, it's much harder in real life. Now we talk in theory, but in practice, that's much harder to just let your winners run. There is a high urge for us investors to lock earnings, to lock the profits and say, okay, it's a triple, let me sell the position and double down on Alibaba. That is a loser. The stock has been doing nothing for the past few years. Earnings are not growing. Let me double down on Baba. And you wait 2 years, and you know what will happen in the next 3 years? Alibaba has a high chance of staying where it is. Earnings will grow a little bit, but not that much. And FICO will continue to thrive. Basically, it depends on your investing style. Either you like deep value and you want to buy low PEs, conservative, but you will not have a lot of growth, or you take a leap of faith with this quality investing. You buy when the valuation is reasonable and you let them grow. You let the flowers grow and you don't cut them, because at the end of the day, the stock market is a fantastic tool to generate some amazing wealth. You want to be invested with companies that can generate some amazing wealth for you, that can compound at 20% per year. FICO is a good example. Not right now because of high valuation, but when the valuation comes down to a PE of 30, yes, I will be interested a lot. But Visa, MasterCard, and if you want some exclusive news, a few weeks ago we learned that Valley Forge Capital Management doubled down on ASML. This is only 2% of his portfolio, but still we are getting interested in this stock. So this is not in my circle of competence, ASML, but if this is in yours, you can do your own due diligence. I hope this video was helpful. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.